Let's talk about your phone, the one in your hand or pocket right now. It's more than just a device. It's a symbol of how interconnected our world has become, and how global shifts can impact our daily lives in ways we might not even notice at first. For years, if you bought a smartphone in the US, it was almost certainly made in China. The Made in China label was everywhere, and it became synonymous with affordable, cutting-edge technology. China was the world's tech factory, the default for over a decade. Its massive factories, skilled workforce, and efficient logistics made it the go-to destination for assembling the world's favorite gadgets. But now, something historic has happened. India has overtaken China as the top smartphone exporter to the United States. This is a milestone that few predicted would happen so soon. This isn't a minor shift, it's a seismic change in global tech manufacturing. Billions of dollars, millions of jobs, and the future of entire industries are being reshaped. The old story was simple: design in California, assemble in China. That's no longer true. The playbook is being rewritten, and new players are stepping onto the field. The crown is passed, and this affects everyone, from companies and workers in both countries to the global economy as a whole. Even the price you pay for your next phone could be influenced by this shift, as companies look for new ways to stay competitive. We're witnessing a realignment of the global supply chain centered on the device you use every day. The smartphone in your hand is now part of a much bigger story. What's remarkable is how quickly this happened. In just a few short years, the landscape has changed dramatically. Just a few years ago, India was barely on the export map. Now, it's #1 in the US, a testament to how fast things can change in the tech world. This proves tech manufacturing can shift faster than anyone expected. Companies are adapting, governments are making deals, and workers are learning new skills at record speed. It's a story of strategy, politics, and international competition, where every decision can have ripple effects across continents. And it's also about massive bets on the future, investments in infrastructure, technology, and people that will shape the next decade. In this video, we'll break down the numbers, showing you just how big this shift really is. We'll dig into the reasons behind this shift, from changing trade policies to new business strategies and global events. And we'll look at the challenges India faces, because becoming #1 is just the beginning, and staying there is a whole new challenge. We'll also explore what this means for you as a consumer, and how it could affect the technology you rely on every day. Plus, we'll take a look at the future of technology, and how this shift could spark new innovations and opportunities. This isn't just a business headline, it's a change that will shape tech for years to come. Let's dive in and see what the future holds. The map of where our phones come from is being redrawn before our eyes, and the implications are huge. And India is now at the center, leading a new era in global technology manufacturing. Let's look at the numbers, because they're staggering, and they tell a story of transformation that few could have predicted just a short time ago. As of early 2025, India now accounts for a remarkable 44% of all smartphones shipped to the US. Nearly half of the entire American smartphone import market now comes from India. Just a couple of years ago, that number was in the low single digits, barely making a dent in the global export charts. India was a minor player overshadowed by giants. This isn't just growth, it's a market flip, a complete reversal of roles in the global supply chain hierarchy. For the first time ever, China's share has dropped below India's, marking a historic shift in the world's manufacturing landscape. The forces changing the global supply chain are real and measurable, driven by shifting geopolitics, new trade policies, and the relentless search for efficiency. In the last year alone, India's smartphone exports to the US surged by an astonishing 240%. That's not just a spike, it's a leap that's rewriting the rules of global trade. That kind of explosive growth is almost unheard of in a mature market like smartphones, where double-digit gains are usually considered impressive. This means massive investments in factories, workers, and infrastructure. Entire cities are being transformed to support this new wave of manufacturing. Millions of iPhones, Samsung Galaxies, and Motorola's unboxed in the US now say, "Assembled in India." It's a label that's quickly becoming the new normal for American consumers. This is a physical, visible change in where our tech comes from, one you can see every time you walk into a store or open a new device. The numbers tell a clear story. A new manufacturing powerhouse has arrived, and it's reshaping the global tech industry from the ground up. And it happened faster than anyone predicted, catching even seasoned analysts and industry veterans by surprise. the competitive landscape has been completely reset, and India is now firmly at the center of the world's smartphone supply chain. How did this happen so fast? Let's break it down. There are three big reasons behind this dramatic shift in global manufacturing. First, tariffs and trade tensions. Over the past few years, US tariffs on Chinese goods have steadily increased, making it much more expensive for companies to manufacture products in China and export them to the US market. Tech companies already operating on razor-thin profit margins suddenly found their costs rising. They had to look elsewhere to stay competitive and protect their bottom line. Second, supply chain diversification. The COVID-19 pandemic exposed just how risky it is to rely on a single country for critical manufacturing. When China's factories shut down, the whole world felt the shockwaves. To reduce this risk, companies adopted a China Plus One strategy, keeping some production in China but building a second hub elsewhere to ensure business continuity. India quickly emerged as the perfect candidate for this role, offering a huge workforce, growing expertise, and a hunger to become a global manufacturing powerhouse. Third, India's own push. The government launched the ambitious Make in India campaign and rolled out production-linked incentives, essentially cash bonuses for every phone exported. This was a game changer. These incentives made India not just a backup option but a genuinely smart financial move for global tech giants. Companies could save money and tap into a rapidly growing market at the same time. So these three forces, tariffs, the need for diversification, and strong government incentives, came together to create the perfect storm for change. Companies were pushed out of China by rising costs, pulled toward India by opportunity, and welcomed with open arms by Indian policymakers. This wasn't just luck, it was a combination of smart strategy, careful planning, and perfect timing. That's how India's manufacturing revolution took off, almost overnight but with years of groundwork behind it. The momentum is real, and it's still building as more companies make the move and India's factories ramp up production. The world's supply chain map is being redrawn in real time, and India is right at the center of this new chapter in global trade. One company made this shift unstoppable: Apple. For years, iPhones were almost exclusively assembled in China, but Apple saw the risks and started moving production to India. They began with older models, testing India's capabilities. As Indian factories proved themselves, Apple ramped up, eventually assembling the latest iPhones in India on launch day. This was a turning point. If India could meet Apple's standards, it could meet anyone's. Apple's move sent a powerful message to the entire industry: India is ready. Other brands followed, confident in India's potential. Apple's decision is the single biggest driver behind India's export surge. The Apple effect de-risked India for everyone else. Now, a huge portion of US iPhones come from India. Apple paved the way for a broader migration of manufacturing. The industry took notice and followed. Apple isn't alone. Samsung and Motorola are also fueling India's export boom. Samsung runs the world's largest mobile factory in Noida, India. Once focused on India's domestic market, it now exports to the US and beyond. Samsung's wide range, from premium to budget phones, benefits from India's incentives and lower costs. Motorola too has started exporting from India, adding to the trend. This isn't just about flagship phones, mid-range and budget devices are part of the story. As more brands invest, they attract suppliers, screen, battery, and chip makers, building a complete ecosystem. India is becoming a self-sustaining manufacturing hub. It's not just assembly anymore, it's the whole supply chain. The snowball effect is real. India's tech manufacturing is now a global force. India's export revolution is no accident. It's government strategy in action. The Make in India initiative aimed to turn India into a tech manufacturing powerhouse. The key tool, the Production-Linked Incentive, PLI scheme. For every phone exported, companies get a cash rebate, making India one of the most attractive places to build phones. The government also cut red tape, improved infrastructure, and made it easier to do business. These efforts created a welcoming environment for global giants. India actively competed for investment, not just waiting for companies to show up. The result? Millions of jobs, a booming export sector, and a new global reputation. India is no longer just a market, it's a manufacturing leader. The government's proactive approach made all the difference. India's rise is impressive, but challenges remain. First, efficiency and scale. Chinese factories are still the gold standard for speed and volume. Indian factories must keep improving to match that level. Second, quality control. Companies like Apple demand perfection. India must deliver every time. Third, the supply chain. Many key components are still imported. India needs to build its own ecosystem. Finally, skills. Training millions for advanced manufacturing is a massive ongoing task. Overcoming these hurdles is crucial for India to keep its lead. The world is watching to see if India can match China's consistency and quality. The next phase is about proving reliability, not just growth. If India succeeds, it will truly become a tech powerhouse. The stakes are high and the opportunity is huge. So what does this mean for you? You'll see more "Assembled in India" labels on your next phone, especially iPhones and popular models. Prices may not drop immediately since companies set prices by market demand, not just cost. But more competition in manufacturing could stabilize prices over time. Supply chain stability is a big win. Fewer delays, more reliable launches, and better availability. Spreading production across countries protects against disruptions. In the long run, India's rise could spark more innovation and new brands. A diverse manufacturing landscape means more choice and resilience for consumers. The tech world is becoming more competitive, and that's good for you. The shift is making the global tech market stronger and more dynamic. India's rise as the top smartphone exporter is a glimpse into the future of global tech. We're moving from a world dominated by one country to a multipolar manufacturing landscape. Companies are adopting China plus one and even plus two strategies, with Vietnam, Mexico, and others joining the race. For India, this means millions of new jobs and a massive economic boost. For China, it's a push to move up the value chain and focus on advanced manufacturing. For the tech industry, it means more complexity, but also more resilience. Companies must adapt to a world with multiple hubs, each with its own challenges. This new model encourages agility, innovation, and strength against global shocks. The story of India overtaking China proves the global order can change, and fast. The map of tech manufacturing has been redrawn, and it's just the beginning.